Once upon a time, cryptocurrency was nothing more than a rather laughable idea. Not the least of which was because people realized that while the idea of a digital currency was appealing in certain aspects, there were other aspects that made it less than desirable. But as time went on, and especially in the last few years, people have started to realize that the appeal of cryptocurrencies like Bitcoin, Dogecoin, Ethereum, and more are well worth at least a little risk. And for one company, they're going to expand what they do based on other customer demands. Allow us to show you how banking giant Citigroup prepares to trade Bitcoin futures. Citigroup's expansion. Citigroup is actively recruiting traders to begin working with Bitcoin futures, according to a new CoinDesk report. The report, citing two sources, including one within the bank, says that Citi is angling to trade Bitcoin futures contracts on the Chicago Mercantile Exchange. A source familiar with the situation told CoinDesk that Citi's trading operation could begin with Bitcoin futures before moving on to other products like Bitcoin exchange-traded notes. The bank is currently awaiting key regulatory approvals for a crypto trading desk based in London, according to CoinDesk. But Citi denied parts of the report. We are presently considering products such as futures for some of our institutional clients, as these operate under strong regulatory frameworks, a Citi spokesperson told Insider in a statement. Given the many questions around regulatory frameworks, supervisory expectations, and other factors, we are being very thoughtful about our approach. In May, Goldman Sachs began offering certain clients access to a Bitcoin via a derivative called non-deliverable forwards, according to Bloomberg Law. NDFs let holders bet on Bitcoin's short-term price direction while getting paid in cash, rather than Bitcoin. Goldman hedges the bet by buying or selling Bitcoin futures on the CME. The firm is not in a position to trade Bitcoin or any other cryptocurrency, including Ethereum. On a physical basis, Goldman's crypto trading head said in a memo obtained by CNBC. Citi had previously offered clients access to Ethereum ETNs, but backed away after the 2017 crypto winter price crash. A second person familiar with cryptocurrency derivatives markets said Citi is actively recruiting people to join a crypto-focused team in London, adding, "The team is likely to win approval to begin trading CME Bitcoin futures first, and then Bitcoin exchange-traded notes, ETNs." Given the many questions around regulatory frameworks, supervisory expectations, and other factors, we are being very thoughtful about our approach, a Citigroup spokesperson told CoinDesk via email. We are presently considering products such as futures for some of our institutional clients, as these operate under strong regulatory frameworks. So, there are a bit of confliction in these reports, but the intent is apparently clear. This major bank is going to start doing things with cryptocurrency in the near future, specifically with Bitcoin. But just how far they're going to push it remains to be seen. Though it should be noted that they're not the only major company in recent times going and making crypto-sized changes in their own procedures. Coinbase to invest in crypto. Recently, the head of Coinbase, CEO Brian Armstrong, made a blog post specifically explaining what his platform was going to do in regards to crypto in the near future, and it's a big move. We believe in the crypto economy, a future where economic transactions, buying, selling, spending, earning, will be based on crypto assets. Our products strive to make that vision a reality by making crypto trusted and easy to use for customers around the world. Today, the majority of Coinbase corporate financial transactions, such as how we pay our vendors, employees, or invest corporate cash, remain heavily weighted in fiat. We're in a strong position to lead by example and double down on how we can enable crypto adoption and utility, starting with how we operate our business. Towards that goal, we are announcing a change in our investment policy. We have committed to invest $500 million of our cash and cash equivalents into a diverse portfolio of crypto assets. Going forward, We will also allocate 10% of quarterly net income into the same portfolio. This means we will become the first publicly traded company to hold Ethereum, proof-of-stake assets, DeFi tokens, and many other crypto assets supported for trading on our platform, in addition to Bitcoin on our balance sheet. Our crypto asset investment allocation will be driven by our aggregate custodial crypto balances, meaning our customers will drive our investment strategy. Our investments will be continually deployed over a multi-year window using a dollar cost averaging strategy. We are long-term investors and will only divest under select circumstances, such as an asset delisting from our platform. All trades will be executed via our over-the-counter desk or away from our exchange to avoid any conflict of interest with our customers. We may increase our allocation over time as the crypto economy matures. We believe that in the future, more and more companies will hold crypto assets on their balance sheet. We hope by incorporating more crypto assets into our own corporate financial practices, we can take another step towards building a more open crypto economy. And that's honestly what all of this is about. It's about expanding the reach and going and getting more people involved in crypto and making it more viable for those who might be hesitant to try it out at first, which might be the reason another crypto platform is on the way. Pure Digital. The Bank of New York Mellon, BNY Mellon, announced in July that it will back the launch of a new London-based cryptocurrency exchange called Pure Digital, the first major Bitcoin trading platform backed by a consortium of large banks. The announcement is the latest to build excitement around the as-yet unlaunched exchange, coming just months after State Street Corporation announced it would partner with Pure Digital and marking an aggressive shift in strategy for the traditionally conservative asset managers. In statements, Pure Digital's Chief Executive Officer Lauren Killey remarked it is the increasing public interest around Bitcoin that is driving banks into the asset class. We have spoken to all the top-tier banks, but we think custody banks were some of the first to see demand, so they are now more advanced, she told Financial Times. Notably, State Street will be providing technology to Pure Digital, and both State Street and BNY Mellon will trade on the platform. A press release from BNY Mellon noted that BNY Mellon will collaborate closely with Pure Digital and the other banks to help establish a new front-to-back office solution for transacting digital assets. It will also reportedly play a role in determining the optimal structure for the platform, to be hosted by Pure Digital, though it awaits final regulatory approval. Global head of foreign exchange at BNY Mellon, Jason Vitale, also commented on the future of Bitcoin at BNY Mellon. Digital assets are only going to become more embedded in global markets in the years ahead, and this collaboration accords with BNY Mellon's wider strategy to develop a digital asset capability for clients across the entire trade life cycle. The plans for this partnership stem from February, when BNY Mellon announced it was entering the Bitcoin space through the creation of a new digital assets unit. So when you add that to what Citibank is doing and what Coinbase is doing, suddenly you have a surge of platforms and banking units dealing in crypto and doing their best to expand the user base of it as well as how they handle it. This is something that even a few years ago would have been viewed as unlikely or impossible, given that the world of crypto was still seen as volatile to a fault. But now, things are changing. Changing minds. It may seem foolish to think that people changing their minds about crypto as a whole is going to make things better for the digital currency. But you're thinking a bit small there. What this really boils down to is how people perceive crypto. At first, it was deemed something that only those with certain setups in regards to computers could invest in. Then, when it started rising and falling, it became something that only those with money would want to risk investing in. But now, with all these new platforms and now banks going and making it possible to trade in Bitcoin and other crypto entities, suddenly the mindset is shifting. Yes, the market is still volatile, but People are going to see these changes and think that this might just be for them after all. And that would be a change that could affect things a lot going forward. So what do you think? What do you think of how Citigroup is going to start trading in Bitcoin to please their customer base who clearly want to be able to invest in it? Are you shocked that such a major banking group is going to diversify in this particular way? In your opinion, will this lead to other bankers going and doing the same thing over time? Or will the volatile market allow them to hold back? Let us know in the comments below. Be sure to subscribe and we'll see you next time on the channel.